Now we're going to turn our focus to Bajaj Electricals, and the company's launched a new range of LED luminaires and also is targeting the street light segment, the smart street light segment, of course, for the smart cities. It's betting on luminaires for growth in, FY16 and beyond. Joining us now is Shekhar Bajaj, Chairman and Managing Director, Bajaj Electricals. Mr. Bajaj, thanks very much for joining us. Just walk us through exactly what this new launch is.
See, what's happening is that the market is changing. People are shifting over to LED, and people are looking at a complete solution. And therefore, what we are offering is a complete solution, whether we are in the complete business of IBMS, that is integrated business management solution. So therefore, you can control everything, whether it is these cameras or we have security systems. So if you have a mall or you are going to some factory, it is a complete integrated management system which is being offered, all LED based, and therefore you can do dimming, you can do so many other things. So that is something which in terms of revenue is not going to give a great thing, but it enhances the image of the company that we are in a position to offer latest technology. In the next 3 to 5 years, people are going to shift more and more towards integrated management system. They are going to look at IoT, which is to change over to having sensors and other things, so that people will, sitting in the office, they can control everything what's happening, and cameras, etc.
Certainly sounds futuristic, sir. But what's the revenue opportunity?
See, this is part of our luminaires business, and the luminaires business. Last year we did, the year which is over, around 600 crores we have done. So this business may give us, not in terms of revenue, but in terms of image. In terms of image, in terms of it maybe 40-50 crores. It's not going to be huge numbers, but in terms of margins or in terms of image building, in terms of saying that we can offer latest technology. So to that extent, it becomes an important thing that the consumer's image of company, that we are not in the Me Too products, we are in high-tech products, which will be a useful thing. So we are looking at ourselves as having a technology focus rather than just the top-line focus.
Sure, I understand that. So, this is value addition in the luminaires business. But, with the cutting-edge technology and the perception build-up, I'm sure you're targeting some sort of market share gains at least?
Yeah, this market actually is a very big market. We are relatively small and new in this. So the market possibility and opportunities, and they are all very big multinationals who are there. But over a period, people are now saying we are very comfortable to deal with an Indian company. Otherwise, there's no Indian company who's really trying in this particular segment. There are Honeywells and Johnson Control and other who are there. So therefore, here we are now getting into, as an Indian company, tying up with important companies all over, whether it's from Switzerland, we have Securiton, or we've got Delta Control of Canada, etc. So we've got good tie-ups which we have done. So people are now comfortable that as an Indian company, we are going to continue from a long-term point of view. So customers say that if anything happens, at least the company is going to be there to service us, because the most important thing when a person buys these products is it lasts for 5 years, 10 years, 20 years. So therefore, if a company is not going to be there, if a foreign company comes in and disappears, then who's going to give the service? So therefore, to that extent, people are more comfortable if there's an Indian company who takes the responsibility, and that's why there's a positive response once we are in a position to show that we've got a tie-up with the top companies in the world, and we are able to take responsibility and be able to service it properly and be able to conform. So that is a very important aspect for which I think people are supporting us and are going to see that we have a good growth coming in the coming years.
Okay, and so what is the investment you're going to make to support this?
See, our whole model is a outsourcing model. So therefore, in terms of capex or in terms of major investment in our, except for our own factory where we are making our high mast and other things with EPC products or high mast and TLT, most of the other things are outsourced outside, so or imported. So therefore, to that extent, our own investment is only on technology absorption in terms of training, in terms of marketing setup, to be able to give a service setup. All those are the areas where we invest in distribution, but we are not investing in hardware in terms of capital investment. So our capex is always very limited. Our whole strength lies that the customer, if he has a problem, we can service it. If he wants a product, we make sure that it gets delivered on time. So those are the areas which we strengthen, and therefore we say we're a strong end-to-end customer. So if a person wants a product, we source it from wherever it is. We can supply, we can do the erection, we can do everything as required by the customer, but we don't need to invest. We can source it from whichever is the best company we need to source from, and therefore to that extent there's no major capital investment that is required. So we can continue to grow without going for debts and all. So those things are not required as a company. So we are almost a debt-free company.
And what about client segments and geographies that you're targeting?
See, this is something which is high-tech, so therefore it will be only in the main cities. We don't have to go to the rural markets because this requires service and all, and it is good for good malls, or it is good for big warehouses, or it will be useful for companies who are having major offices which have to be renovated and controlled. So we don't have to go into the interiors. But as far as, so in our total turnover against 4,700 crores that we've done in the current year, next year as a company we're looking at a turnover about 5,500 crores. Of that, EPC business from 1,600 should go up to about 2,000 crore. In terms of our lighting business, against 1,100 we should go up to about 1,300 crores. And in case of our consumer durable, from around 2,000 we should go around to 2,200 crores. So we are looking at a 15% growth overall in a consumer durable, and every business we are looking at a double-digit growth from 10 to 15%. Each of them we are looking at 10 to maybe 20%, but minimum 10% growth we are looking at all the three segments that we are there: lighting, consumer durable, and EPC business. Minimum 10% growth we are looking at each of the three segments.
Oh, okay. I just want you, sir, to just reiterate that, distill it down to a growth target for FY17.
I've already told you that against 4,600 crores, we are looking at 5,500 crores. So that's already been, I've just mentioned that to you. And as far as the market is concerned, market penetration of our consumer small appliances is very low. Hardly in the upcountry, it may be about 5%. So therefore, there's a great scope available. And as far as the market shares, market should grow by, according to me, double-digit growth, and we should be having that type of growth. So we should improve, or at least have our market share should be remaining stable. There should be no reason for market share to decrease.
Okay. Any more launches in FY17?
No, this is something, no, this we are now going in different places. We've already been to 3 or 4 centers, so that if we have got these new products, unless the consumer, whether it's Reliance or otherwise, if they don't know that these new products are available, how do you go and sell it? So therefore, these are ways by we are going to different centers, inviting the customers who can possibly use our IBMS system and therefore be able to place orders on us. So therefore, we are giving them a demonstration. We are showing them physically what is the new technologies which have come in the world and what we have got a tie-up with, and being offered it to the customer.
I'm going to leave it at that. Shekhar Bajaj, Chairman and Managing Director, Bajaj Electricals, thanks very much for joining us. Look at that stock, really moving up in the course of that conversation. 230 on Bajaj Electricals, up 1.89%. After the break, Sudhir Chaturbedi, Chief Operating Officer at NIIT Technologies. Yes, it's an earnings review with him coming up in a couple of minutes.